welcome to the stage Amanda Kanega.
Good morning, everyone. My name is Amanda Kanega, and I'm the Chief Development Officer of the Nest Climate Campus. Welcome to day 3 of our programming, and for those of you who joined us day 1 and day 2, a very special thank you. Today's themes include travel and tourism and the rise of ESG, impact investing, social, economic, gender, and climate equity, and philanthropy. It is my honor to introduce today's keynote speaker, an impact-focused leader. Social justice investing, integrating racial, gender, economic, and climate justice into high-performing financial portfolios. Please welcome Rachel Robasciotti, founder and CEO of Adasina Capital, an investment and financial activism firm. Thank you.
Hello, thank you so much for being here. I'm delighted to be here talking about social justice investing today. At Adasina Social Capital, there's something very particular that we believe, and it's that those who are closest to the problems in the world that we are trying to resolve are also closest to the solutions. And so that's really what is underlying our strategy of mobilizing investors and connecting them with social justice movements so that we bring the power of financial markets to the largest problems of our day, which, when we talk about social justice investing, is not only racial, gender, and economic, but also a deeply integrated climate justice. So before I tell you a bit more about what I do, it's actually really important to me to tell you why I do it. I live in San Francisco now, but I'm from Oroville, California, which is a rural town that it was particularly segregated. And if you're wondering, I'm 44, and if you're wondering about segregation in the 1980s, wasn't that something that was in the South in the 50s? I'll have you know that it was my town that declared themselves a constitutional republic in order to get out of mask mandates. So my town, Oroville, has a long and storied history of resisting social progress. So they still had segregated areas in the 1980s. When people know about Oroville, the thing that they know about it most of all is the dam. We have the tallest dam in the United States there, and it was actually built by people who migrated to Oroville. Many of the black people who lived there migrated there in the 1930s as the black community was leaving the southern United States in the face of Jim Crow laws and many other racial inequities that were occurring. We came up to build the dam, and generally speaking, the black workers were given the highest risk jobs building the dam. We were then allowed to live and buy homes on the south side of town. And these are a couple of recent photos from the neighborhood where I grew up. Sometimes I go to financial conferences where they show the wonderful homes they're building in developing countries and how they've replaced the dilapidated homes, and I'm often reminded of the neighborhood where I grew up. Most people don't understand that there are people who live this way now in the United States. So I want to tell you just a little bit about my family who came up during that Great Migration. It was a family that was mostly led by women. And the reason it was mostly led by women is because many of the men were taken out of the community as a result of mass incarceration and police violence. In my lifetime and in my family, I've had 3 close family members murdered by police officers without repercussion. And I just want to bring them into the room with me now. They're Alan, Brady, and Jonathan. Yeah, it's important to bring them with me. Our families of women were also chronically impoverished, and we dealt with many of the issues that come premature death, disease, substance abuse. Unemployment was particularly high, and good jobs were hard to come by, and even harder for women. So being in a situation where I was directly facing racial, gender, and economic injustice, the fact that those were inextricably linked was something that was very clear to me from an early age. But climate justice issues weren't really on my mind. And to be honest, working in social justice movements, there was a deep divide between the people working on social issues and the folks working on climate issues. The climate folks are usually young and white and wealthy, and the people working on social justice issues tended to be people who had backgrounds more like mine. But things started to change in Oroville. In the 2010s, we started to have extreme weather, a lot like what we're seeing now, but it came early to Oroville. In 2016, we had it was the largest year of a historic drought. And at the beginning of 2017, we had this historic snowmelt from the Sierras. So what started to happen to the dam is that it started to collapse. And I was coming back from a trip and checking out the news and saw my tiny town on the international news on February 11th, 2017. That is the Oroville Dam, and beginning to burst. And when we looked at the news reports, we realized our family's neighborhood was the first to be evacuated. Now that's the southwest side of Oroville, which happens to also be the south side, as we call it, which is where we were allowed to live and buy homes. So I just want to pause and ask you to let that sink in. Black people from the South, segregated into living and taking high-risk jobs, building the dam, and segregated into living in the area that would be most likely to flood if the dam were ever to fail. So this is not a rare story. This is the story of the Black communities in the 9th Ward after Hurricane Katrina. This is actually the story all over the world where the communities and the land that's most vulnerable to climate change, right, are those same communities that we've decided in our economic system are the ones that matter less. I want to just give you a few proof points to that fact specific to Black communities. The NAACP says directly that environmental injustice, including climate change, systemically impacts communities of color and low-income communities. So this is millions of Black people who have higher cancer risk, who live near oil refineries, who live near natural gas facilities. So when we're looking at this issue of racial, gender, economic, and climate injustice, and if we really think deeply, we start to realize that they have something in common, and that's that as human beings, we've decided that some people matter more than others. Generally speaking, I would say we value men more than women and gender expansive people. We value straight people more than LGBTQ+ folks. And we definitely value white people in our society more than we value Black, Indigenous, and people of color. This is really an important point because ultimately, this leads us to this idea of intersectionality. So some people are familiar with that here, but for some people it's new. And intersectionality is this complex, cumulative way that multiple forms of discrimination combine, overlap, and intersect. What's important to understand about that is that we are going to keep seeing the climate catastrophe play out in communities that are already the most vulnerable to begin with. And if we want to move toward a different future, a fair and sustainable future, it will be incredibly important to engage with these particular communities to see what their needs are, because they're going to be our canaries in the coal mine. Now, thankfully, the dam only started to burst and the south side was saved. I, however, had been working on racial, gender, and economic justice issues and investment portfolios for quite some time, and my eyes were opened suddenly to the fact that we'll never be able to pull those apart from climate issues. And so it became clear that we were going to need very large collective resources to address these huge societal problems. And that's something that socially responsible investing already knew. Like, of course, we want to take our collective resources, but as it evolved into what is now ESG, we found that the link with social justice movements was something that was ultimately missing. If we believe that we are going to solve the largest problems of our day, we are going to have to engage investors in that solution. The government right now is in paralysis, it seems. There are only a few actors that hold our collective resources. Investors are one of them, and that means that they have power. Now, investors wouldn't tell you this, but they also care deeply about the future. When we talk about risk and return, we're talking about the risk of losing the money that we've invested in the future. We're talking about earning additional money on the investments that are returned later. That's in the future as well. So if investors both have power and an interest, that means that they're deeply connected to the future and at the same time have control of our collective resources and the ability to make large societal shifts. Not only that, so not only do we want to engage investors around making shifts in society, there's a long-term risk advantage for investors. I want to go back one. I don't want to overwhelm you all with the numbers just yet. So taking a look from 1980 to 2020, the oil and gas sector weightings in the S&P 500 fell 27%, and that was after global fossil fuel divestment campaigns. Very interesting, right? Also, from 2020 to 2021, the net income for core civic was down over 200%, and that was after the campaigns to end mass incarceration that racial justice activists led. What we're seeing is that we work in the area of publicly traded companies and public markets. What we're seeing is that social justice movements may be early indicators of risk. So it not only makes sense that we would engage investors to make change because they have the power over our collective resources, it's also true that this is something that's to an investor's advantage. With this understanding, we created an approach that we call social justice investing, which is the deep integration of racial, gender, economic, and climate justice into investment portfolios. And specifically, we do that work in the public markets. And I want to give you a sense of how we do that work and what might be possible. So when we say that those most impacted by the problems, those closest to the problems, are also closest to the solutions, well, how do you engage with those closest to the problems? What we do is we partner with social justice organizations, and they're those that are working at those intersections. Those organizations help us determine our investment criteria. So if you're looking at a very large pool of publicly traded companies that you could invest in, and you're trying to figure out what to focus on, our social justice partners are informing what criteria we have for evaluating the companies. They also help us identify, and this is actually a very important theme here, they help us identify the particular impact metrics. I want to stop for a moment and talk about the difference between language with social justice movements and investors. Just think about the word voting. If I'm talking to shareholders, the idea of voting is very clearly voting your company shares. But if I'm talking to the Movement for Black Lives, they are looking at civil voting rights. If you also think about the idea of equity, equity to someone in the financial markets means their share of a company that they own. But if you are talking to One Fair Wage, they're talking about the equity that workers might have in a company, or that the social equity, not that the workers might have in the company, but that they might have in society at large. From those impact metrics, we do an incredible amount of translation work. That translation work is what it takes to go from broad investment criteria into specific impact metrics. And I'll give you an example of this in a moment. Like, how do you actually put those metrics into an investable portfolio in a rigorous and consistent manner? I'd like to give you an example of what we find to be at the root of racial and climate justice, and that's extractive agriculture. The first thing that we learned from our social justice partners is that extractive agriculture is a practice that are agricultural practices that extract unsustainably from people and the planet, and that, I'm gonna go back one, that extract unsustainably from people and the planet, and they include the corporate concentration in big agriculture. Now, many of us in the climate movement know a lot about big agriculture, but I have to tell you that investors still think that industrial agriculture is feeding the world. Why should we care about this particular issue at the intersection of racial and climate justice? Well, from the climate side of things, 1/3 of all greenhouse gas emissions come from industrialized agriculture. It's the primary cause of deforestation in the world, and we know that big ag is the largest consumer of fossil fuels. From a racial justice perspective, this is something that we care about because regional and local agricultural practices that are impacted negatively by big agriculture are primarily practiced by people of color in the global south. So these are also those same communities that are at the greatest risk for climate change. I also just want to take a moment, we're in the United States, and really give a little bit of framing here. When we think about extractive agriculture, I want to take us back to the American South and the fact that enslaved Africans were brought into the American South very specifically to work something that was an unsustainable product, cotton, right? And if you think that an unsustainable product and that integration of kind of like racial and a climate justice issue with agriculture kind of only started then, I'll let you know that some of the largest productive agricultural land in the state of Texas is owned by the Department of Corrections. So this is something that we care about from a couple of different angles. And what we want to also be looking at is the sense of why we should care about it as investors. So I believe that investors want to generate long-term sustainable returns. And I believe that you do that by investing in sustainable companies. Right now, the industrial agricultural sector consumes 75% of the world's resources. I'm talking about resources related to agriculture, land, soil, fresh water, and as a result, they feed only 30% of the world. Interestingly enough, sustainable regional local agriculture uses 25% of the world's resources to feed 70% of the world. If you're thinking about generating sustainable long-term returns, don't we then need to be invested in the companies that are part of a sustainable food system for the planet? As you can see, unsustainable agricultural practices aren't what's going to be generating the long-term financial returns that we're looking for. I want to tell you a little bit about how we came to this understanding and started to integrate it into portfolios. Remember I told you that we start with our social justice partners? Well, our partners in this are ETC Group. They look very closely at the intersection of racial and climate justice. They helped us identify this broader criteria of extractive agriculture and go deeper into the metrics. So they talk to us very specifically about corporate concentration and the particularly harmful business practices, including synthetic fertilizers, pesticides, other agrochemicals that are not only eradicating the fertility of our topsoil, but they're also producing cancer risk for many of the communities and workers that are exposed to them. We ultimately were able to identify a set of companies, and those companies we have not only excluded from our own portfolio. Adasina has an exchange-traded fund or an ETF. We've not only excluded those companies from our own portfolio, but you can look forward in the coming months to seeing a white paper and an investor mobilization campaign that we will be releasing in order to educate and mobilize investors to begin to take action on extractive agriculture. Now I have to tell you that in Europe, they are a bit farther ahead of us on this. They can't wait until we produce some of the reports that will be coming out. Some of the feedback that we've heard from them is that public markets really needs to be engaged, because in the climate movement, while we know what the solutions are, solar, renewable energy, regenerative agriculture, we don't necessarily know who the Exxon is. And so what we're doing is making a list, and this is something that we use and share with investors to allow them to also identify these companies in their portfolio and divest or engage, and also to come together to support public policy. What we're doing in this example, and what I've been talking about, is really measuring what ultimately matters. There's a difference between finance talking to itself about what to do about the problems of the world, and having social justice organizations that represent the communities most impacted by racial, gender, economic, and climate justice tell us what's important. So I just want to give you a moment. You can see only looking at fossil fuels is something that what is like now more traditional ESG focuses on, but the social justice investing issue is to also look at extractive agriculture. Similarly, after the Me Too movement, finance tended to focus on women on corporate boards because clients said they wanted something done about gender justice, but our partners, Ultraviolet, as well as many others working on gender justice, asked about ending forced arbitration for sexual harassment, which is something that Adasina was central in mobilizing investors to back, and that ended in 2022. So you can see, ultimately, for the investor, you are going to measure what matters, because if you intend to make impact, it just makes sense to go to the community of intended impact and ask them what investors can do. And that very simple action is what's not happening already in finance, but is happening in social justice investing. So I've spoken a lot personally, and I've spoken a bit about how we start to integrate these issues into portfolios, but you might be wondering, how does this all work out for the investor? Well, pretty well. Our investment thesis that social justice movements are giving us early indicators of risk is something that is playing out. The light blue line is the Adasina index. Our ETF seeks to track that social justice index. And the line below it is a very similar unscreened portfolio that's also a global all cap or companies of all sizes portfolio. So you can see we're delivering market-like returns and also addressing some of the most pressing problems of our day. So I see a few of you taking pictures. This is the slide when I put up the fourth one of this. This is the slide you'll want to actually take a picture of. Because when we put it all together, there's really four main points that I'd like you to leave here with. The first is that racial, gender, economic, and climate justice are inextricably linked. We can't deal with one without dealing with the others, because they are all impacting the same communities. And this concept of intersectionality explains why. Investors have to be part of our solutions to big problems because they have power and an interest in the future. We believe that social justice investing is a very powerful approach because the social justice movements have insights that are not otherwise currently being included in portfolios. These are insights about risks and opportunities. And of course, this is the photo slide. And of course, you'll want to figure out what your next step is. We have a few resources for you. Of course, we'd be delighted if you invested with us at Adasina. Also, one of the things that we do that's most important is mobilizing other investors, because what we can do in our own portfolio, while admirable and important, is nothing compared to what happens when we act collectively. So we allow other investors to take advantage of the extractive agriculture data. You can find that on the Bridge website, as well as many other data sets related to racial, gender, economic, and climate justice. You can also stay in touch with us. You can text the word justice to 55444 and be taken through a process to sign up for our newsletter. And you can stay connected with us here on social media. There's the QR code. We'll find out if that actually works from the stage. Everything that we do at Adasina, we do in community. So asking you to come with us, to join us in making a fair and sustainable world by looking at investments through the lens of racial, gender, economic, and climate justice is my request for you today. Please join us. We have just a couple of minutes for a few questions. I believe there was an iPad. The iPad may not be here. We'll do them live. Anyone have any questions? Yes. I'll repeat your question so that it gets.
If we want to invest with you, how do we do that?
Is that you, Chad? Yes. one of our wonderful supporters. The Adasina Social Justice All Cap Global Exchange Traded Fund has a ticker symbol, JSTC. It trades just like a stock and should be available anywhere you can trade stocks. We also have products for financial advisors that are available through the Gitterman platform, and Gitterman Asset Management is going to be hosting a number of sessions today, so we'll be talking about some of what's available there as well. Thank you for that. Any other questions? Yes?
Is your extractive agriculture work and data, is that focused on the US or is that global?
It is global, and one of the reasons we actually have taken longer to put out that data set is because it's global in nature, as are our partners on that work. So we're looking at emerging and developed markets, US and international. Yeah. All right. Yes?
I don't know if this is anticipating what's going to be in the paper, the white papers, but I was just going to ask you a little bit about your approach to divestment versus engagement, and whether there's a way of working in a more concentrated way from an investor point of view to drive change more efficiently through public companies.
That's a really good question. So in case anyone else didn't hear it, it was the question about divestment versus engagement. For our own portfolios, we've chosen divestment. We deliver clean portfolios. But if all we did was divest with our assets, we have $250 million under management. If all we did was divest with our assets, we wouldn't have this large-scale systemic change that we're looking to make. So what we do is mobilize collectives of investors. Our largest investor coalition is a $1 trillion coalition that's acting collectively to end the sub-minimum wage, just as an example. What we do in those coalitions is we work both to divest, and also we work with those who are engaging and filing shareholder resolutions. I often say that a shareholder resolution at a company is a bit like a hammer, but someone has to direct that hammer such that it's more of a tool than a weapon. And so what we do with the social justice movements is figure out what exactly should we be doing with the public companies when it comes to engagement. Interestingly enough, because we lead these coalitions, although we divest, what we often find is that we are given the right to show up at the shareholder meetings on behalf of the entire coalition. So we're able to show up, we aren't giving up our seat at the table, we're able to show up in a much more powerful way. Thank you all so much for your time today. I hope you enjoy the rest of today's programming, and hopefully we will see you. I'll be at a panel if you have any questions. I'll be at a panel where we'll be talking about some of these issues in greater depth. I believe that our panel is inside of the Gitterman Asset Management track, and it is the Race to Resilience. So have a wonderful rest of the day.